Hey, what's up, guys? We have Joshua Thompson here. He is a tax accountant. So how you doing today, Joshua?
Dude, I'm doing good, Micah. Doing good. Like I said, I was getting a little over that cold, but other than that, things are great. Business is busy, which is always good in business, right? Other than that, all is well, man.
Cool. Yeah. So could you tell us a little bit about yourself first, and we'll go from there?
Yeah, definitely. So I started in the Marine Corps, got out of the Marine Corps, ended up going to school, thought I was going to be a veterinarian. Decided as I was working in some veterinarian hospitals, this may not be the career path for me. Some of these medicines are fairly large and hard to pronounce. So I decided what better option is to get more into business. I volunteered with the IRS, did their VITA program, which basically you're helping out low income individuals with tax preparation. Did that for a little bit, decided I actually like this, which you'll probably never hear anyone say again, right? Ended up going to work for a CPA office. I was there for a few years, got my degree in accounting, learned a lot more tax there. Around COVID timeframe, my son was born, decided it's time for some major change. We moved from Southern California to the Dallas, Texas area, started the business, and really just been hitting the ground running ever since.
Cool. Yeah. Accounting was one of the things I wanted to major in college. It was like first computer science, couldn't do that. Then I tried accounting, couldn't do that. I'm pretty good like at math too, but for whatever reason, both of those things, computer science and accounting, were just like really confusing to me. Like I feel like I could probably get through most math classes, but there was something about the accounting that seemed to be almost to me kind of like backwards. Like I just couldn't wrap my head around like the what do they call it? The pluses minuses or whatever, the assets and
Yeah,
liabilities or whatever. And
yeah,
it's like it doesn't really seem that complicated on its face, but when I was taking the test, and then I think also with like the words and the math, like the word problems I'm not great with. So it's like when it's just math, I'm fine, but when you add in the words,
yeah,
so I don't know how hard it was for you in college or whatever, but
yeah. So for me, like I'm very similar as far as math. Like math was my strong suit. I was not a big fan of English. Um, Math was just that my area of expertise. Always just came naturally, thankfully. And you're 100% right. When it comes down to accounting, you got to know your debits and credits. You have to know how liability this or how to do an asset there. And it seems like it's very easy. Let's be honest. Everyone has QuickBooks. Everyone does their QuickBooks themselves because it seems straightforward and easy. But if you really get into it, or you're doing more complex stuff, rather than just buying stuff and have expenses, it could really get fairly tough. But I would say after I took my first course of financial accounting, from there, it just seemed like it was smooth sailing until I got to the upper division. Then you get into advanced accounting. You're doing like Gap stuff or stuff that big companies use like Amazon and Microsoft because they want you to graduate and go work for those companies. And that was probably the hardest part for me. That and cost accounting, which a lot of manufacturers will use. But the financial accounting stuff, that's the easier stuff. What most typical businesses use. That was my bread and butter.
yeah, yeah. Like I took one class in college at Saddleback College, and it was I don't even think I finished the class because it was like just I was just like not into it. But then I got a job in accounting, not in like real accounting, but like entry level accounting
Yep.
after college. I majored in psychology, got an entry level job, and then I decided to go back again to try accounting. But I was like, like ultimately I did want to do that, but I wasn't able to get to the first class, or I think it was the second class I got to. But then my dad said, like you said, once you get through the beginning, it gets easier. So maybe if I just kind of like forced my way through the and kept going, maybe I should have done that. But yeah, so you mentioned moving from California to Texas. I've heard a lot of people are doing that because of either taxes or not liking, I guess, like the political state of California. Was that true for you, or is it something else?
Yeah, spot on, really. I was in California. They're passing laws, things are coming up, and I'm reading updates that they're doing. I'm in the tax world, so I see the updates that tax-wise that they're doing, and I'm looking at a lot of this stuff, and I'm just like, there's no way if we stay here for 20, 30 years, say the rest of our lives, my son's going to be able to, one, afford a home here, and do I really feel like he'll be comfortable here? And I just decided this is just not it probably wouldn't work out. So we moved to Texas. It was just better for us where I was at starting the business. So I'm running the business, being a stay-at-home dad with my son while my wife is working. She's a teacher, special education teacher. And no way we would have made that work in California. It would have just been way too difficult with what a teacher salary gets, where the business was at. Thankfully, 2 years, a year and a half, 2 years go by, and we were able to kind of flip flop roles, and it worked out. But I don't think it would have worked out in California.
Yeah, like you hear that a lot from people, and I kind of feel like, I mean, obviously with the money, it's like way too expensive here. But like with other things, I kind of think that people are kind of full of it. But coming from like an accountant himself, it's like it probably just is really true that California just isn't doing things right. And but you hear a lot about like the during the COVID stuff. I don't know if you listen to like Joe Rogan type stuff, but him and his whole crew kind of moved out to Austin, and it's kind of like I don't know, like I was just kind of like whatever, like I'm more of like a liberal guy anyway, so I'm like fine with
Mhm.
it. But in terms of just pure money, it's like man, they have to find a way for people to like be able to live here. I mean, it's getting pretty bad. Like I mean, it's like if they care so much about people and the homeless, and it's like they got to do something about it, right? I mean,
Yeah, 100%. It's an issue, and some places they're trying to handle it, but California as a whole, they're just not doing the best job when it comes down to a lot of the main issues they have. I feel like they're just so focused on giving giving money to the under a certain threshold where as they say, the middle class is kind of dead in the United States, right? Well, in California, it's once you get over a certain threshold, well, you start losing all these benefits that you had from the state level, the federal level, the this that education system with your kids, and all this stuff. You start losing, and once you get over that little threshold, even though you're making more money, you're kind of losing money because now you have to pay more for the other services you had. So it's just one of those things where they money wise, they just need to restructure how they're spending it, where the bulk of it's going, just do things differently.
yeah. And so it's almost like it sounds like it's almost better off if you in California if like you're making less in terms of the state than making more. Because if you're making more, they're just taking more. Correct?
Yeah, yeah, pretty much. I would say in California, like if you're making $70,000 or less, it's tough. Like you or $70,000 or less, you may not have much money, but you'll be getting more benefit from California, right? Once you get over, I would say 70,000 to about, depending on where you live, up to about 150 to $200,000, you're theoretically middle class, but you start missing out on all the benefits if you're $70,000 or less, right? In that threshold, it's like you're still tough because even though you last year you made say $60,000, you're doing good, doing okay. This year, if you're making $80,000, well, you're doing worse because you lose all those benefits. And it's one of those things where it's hard to find the balance. I understand from California standpoint, it's difficult, but it doesn't seem like they're trying very hard from what I've seen.
Yeah. It just seems weird to me because like I don't know, in my mind, like I make less than 70,000, and it's like in my mind, it's almost kind of, I mean, definitely over 100K, I would say is pretty difficult to make. And it's like that seems to be like especially if you're like a single person, like if you have two people like you guys do, or even me and my fiance, you can make over 100,000. But as a single person, it's pretty hard to make over. I mean, I think it's pretty hard to make over 100,000. And but yet somehow all the people are living here, or
Yeah.
most people seem to be getting by, I guess. I mean, I had to move out. I was in Orange County, which is, as you probably
hmm
know, is one of the most like. Where did you live in
So I lived
Cal?
in Ventura County.
Okay, yeah, yeah, you told me that. So, I lived I grew up in Orange County, and it's like one of the best places to live. But then
hmm
my whole family had to move out to the Inland Empire. I don't know if you know
hmm
the IE, and that's where I live now. And it's still expensive, and there's still people moving to my city. My city is kind of like blowing up. I don't know if you don't know of Beaumont, California.
I've
There's
heard of
also
it.
a there's also a Beaumont, Texas, but Beaumont, California. I think I've heard that it's like one of the most growing. I mean, it's really been growing. And so, I mean, I guess my question would be like, how are all these people able to? I mean, does everybody have a job that's over 100K? Is everybody like a? You almost have
Yeah.
to be like at least an accountant or something, and up, right? Accountant, lawyer, doctor. You know what I mean? I think it seems like there's only so many jobs for those types of people, right?
Yeah, and it's funny. I've been seeing more. more businesses, there's more trades nowadays that are paying more than $100,000 than it seems like ever before. Um, like a lot of firefighters, police officers with
Yeah.
overtime, they could make good amount. Teachers, not so much, depending on where they're living. But with I know California is pushing that minimum wage, to try and get it higher. That's a whole nother conversation in itself. But one thing I've seen is a lot of people in California, they end up getting Section 8 to cover the housing, right? And so they'll stay in Section 8 to help out with the housing, on the government's dime for many years. And they're like, hey, listen, as soon as I get over this threshold, I lose Section 8. I am not going to try and earn any more than this. So that way I could keep getting Section 8. And it's like a bittersweet thing because you don't want to you want to keep Section 8 so they keep helping you, but you don't want to go over a certain threshold. So you try and cap your earnings in order to maintain those benefits. Everywhere you go, it's a little bit different on how, if there's a phase out little by little, but still it's one of those things where like a lot of people, I know people today who's been on Section 8 in California for 20 years and just they haven't had any ambition to do better because they have that benefit.
Yeah, and what is I don't even know what Section 8 is. What is
Yeah.
that?
So Section 8 is like a housing voucher, basically. The government, you go to the government and say, hey, government, my name's Joshua. I have 4 children. My wife doesn't work. I make about X amount of dollars per year. Based on this, will you help me with my housing? And after you go through the application process and they check you out and all these things, if they say yes, they're like, okay, yes, we'll help you with your housing. We'll give you a voucher every month for, this is typically only for rent, not for if you own, say $1,000 a month, $1,500 a month, $2,000 a month to help pay for your housing as you start earning more money because you qualify in our parameters. So Section 8 is really good if you need housing, but it's tough because, like I said, do you want to earn more? Uh, do you want to end up buying? And a lot of people say, no, I don't, because I'm going to lose out on Section 8. All right. So it's that fine line where it's tough, where it's like, do I go higher and strive for more, or do I just stay comfortable with where I'm at?
I didn't even know about Section 8, and I mean I can kind of see why they're doing these things
Yeah.
because I mean obviously like you don't want to just give away money, but like I mean I would hope their goal is good. They want to help people out, and the prices of rent and buying is just too much, so they have to do something. And I don't think that they can totally do like a full on rent. I know they do rent control, but they can't do like a full on. You can only charge this much
Right.
for a house, or you can only charge this much for rent. So I mean, I think that they're ideally, I kind of think that that's the right way to go. But then there's people like you who say that like it actually reverses things and makes people so like they don't really want to move up because they're in that Section 8, or they just kind of stay stagnant. Or people will obviously also say people just kind of like mooch off the system.
Yeah.
But I don't really know what else you're supposed to do for people who just aren't able to make
Yeah.
above 70K or a year, especially like you
Yeah.
said, if you have 4 kids and a wife who doesn't work, and then you know,
Yeah, and it all depends. I don't know the exact threshold. 70K is like kind of number I throw out there, but you're 100% right, and it's tough because like what do you do? Because you want to help, but how much do you help? And if you stop helping, then you get all these people that lose houses, and then now you have an even more homeless issue. I think, in my opinion, my professional opinion, Josh for president 2028, right, is we need to do something mainly about the housing. And yes, interest rates are going to help get people in the house, but it's also going to make house prices go up because now more people, the demand goes up, which is going to reduce supply, which increases the price, right? So I think we truly need to do is just get to the point where we either can get institutions out of our housing market or get it to the point where they don't have as many tax benefits if you're treating it as a rental. And hey, listen, I invested in rental properties. I deal with a lot of real estate professionals. They may hate me for bringing this up, but I think that would truly help the everyday individual getting into that home. Because when you have BlackRock that's going to buy this whole block and pay 30,000 over asking, it's so hard for the family of four that's trying to get that first starter home because they can't compete with BlackRock. I was talking with an individual today. He has rental properties in the Philippines, and it was really interesting. They have a law in the Philippines that it's a 60-40 law. If you buy a rental property, 60% of it has to be owned in the country, by you. and 40% can be owned by a foreign individual or anything like that. And with the number of people from out of the country as well parking their money in the United States real estate, I think that's something that we need to enact here. I believe, I want to say Canada, they had some big banks based on the issues that they're having right now, investing heavily in the US. I know China invests heavily in the US real estate market. It's just one of those things where it's like, we need to do something secure it for our everyday individuals. Bring back the American dream, as they say.
Yeah, and yeah, I worked with a Filipino girl who said I remember her saying like you couldn't even like buy like a car there with unless you had like all the money. Like there was like no credit system or something.
Yeah, I
And so
heard
like
that.
if you want to buy anything, I don't know about houses, but like anything like a car, anything expensive, you just have to buy it straight up. If you don't have the money, then you're out of luck, I guess.
Hmm.
But yeah, in terms of the institutions buying up everything, me and my fiance are talking about the same thing. How you have people just buying 5, 10 homes and then like not living, they're only living in one. And so like they have like if you go to like Laguna Beach, there's all these like really nice beach homes that like nobody is even living in. It's
Yeah.
just crazy. So is there something that we can do, the government or whoever can do about preventing people, outsiders from, or not even outsiders, but BlackRock or whoever from
Oh
buying up a
yeah.
bunch of properties? Can we stop that?
100. Well, we could deter it, right? Maybe we could throw a law in there, stop it, but lobbyists are powerful. Now, tax-wise, if we had an option, I believe tax what we should do. A lot of people invest in real estate for the depreciation, which is slowly writing off the house. So you could sometimes, depending if you qualify, write it off against your W-2 income, take to reduce your taxes. That's why a lot of people invest in real estate. There's more to that. It's a very, high level view of the conversation, but I think based on that, it's things that we could do is really to reduce that depreciation, to reduce the tax benefits of investing in real estate and having it as a rental property. If you want to invest in it, great. Hope the value goes up. Hope you get cash flow every month. But if you're investing it for tax benefits, I think that's where it should stop, because then that's what gets all the big corporations investing in it, because they invest in it not just for hope that a price goes up over years, but also how much depreciation, how much tax benefits can we take this year with it. If we did it where, hey, real estate, if you have over say 10 properties or 5 properties, you can no longer take depreciation on real estate. Or if you are a corporation that has over say $1 million in assets, meaning if $1 million of real estate, which is really easy to get, you can no longer take advantage of depreciation. You can't take losses in excess of income or things like that. I think that would help deter a lot, but it wouldn't stop unless like a law was put in place, and that's whole probably be unconstitutional because American dream and your right to invest and all these things. But if we did that, plus the cities and states enact, say, a 50% property tax hike on rental properties on people that own 10 or more units, then that's something that would also drastically deter investors that have, that 10 or more units. The big corporations are big real estate investors from buying more property in that space to try and reduce the high in prices going for homes.
Yeah, it seems kind of like an obvious thing that we would do. And then also, like, I know we probably can't prevent people from buying homes within the country, but like you were saying, like, I think it even happens with from outside of the
Yeah.
country, like with China. And it's like, it seems like we could definitely prevent people from outside of the country buying, right? Like,
Yeah.
that seems like something that we should be able to do.
Yeah, I 100% agree, or at least deter it, or in some shape or form handle it. Now, there's always going to be people that have workarounds, and of course, there's no perfect system to do it, but I do think there should be some change. But a lot of people, of course, that politicians, they own real estate. A lot of people, if you make over $200,000 a year, you probably own some sort of real estate, indirectly or directly. And it's their self-interest is to not stab themselves in the foot by, enacting a law. Will we ever see it? I doubt it. Would I like to see it? And I think that would really help the housing market. I think so. If we did that and incentivize builders to with a lower interest rate for builders than the interest rate everyone else gets. That way they could keep building, bring up supply, reduce demand based on investors. I think that's really be it's a win-win for the housing market, for the everyday individual looking to get into a house.
Yeah. and it gets complicated. And I think this is like, why I wanted to have you on was just like most people, like I didn't even really know too much at all about the tax credits and all that kind of stuff. And then when it comes to
Oh
the
yeah.
words, like I said, sometimes I get confused by all that. But in terms of, and we'll get into that, but in terms of where to live, what do you think the best places to, or I guess really mostly the cheapest places to live that aren't like, horrible. Obviously you decided on Dallas. So I've
Yeah.
heard Texas in general is good, but where else are good places? I've thought about like when I've thought about, I don't want to move from California because I love California, but when I've thought about moving, this was kind of like before my fiance, but she doesn't really want to move there. But I thought about like Vegas, just because I
Yeah.
like Vegas. I'm like, it's at least it's only like 3.5 hours
Hmm.
from me. I could like get back and forth. There seems like a lot of stuff to do out there. A lot of people go to visit, but yeah, where are some of the best places to move if you want to move out of the state or even within California, maybe.
Yeah. So within California, as long as you're not in LA County or San Francisco area where they have higher local taxes and sales tax, you're not getting hit as hard. But you're still going to have to deal with the property taxes in California, the higher valuation, and the income taxes and all this other stuff they have. I would say a lot of people have moved to Texas. The value as far as getting something a lot cheaper in Texas is starting to go away, depending on the area you're living in. Unless you want to go to a rural part of Texas, you can still get like a multiple acres for $300,000. But I've seen a lot going on in or Arkansas actually. A lot of investors been buying out there. The prices have been going up, but it's an area for investors that still cash flow or can still cash flow, and also for homeowners because the prices haven't gotten absolutely ridiculous compared to the rest of the United States. So a lot of people are going into. I see Arkansas quite a bit going into Iowa recently. A lot going into Georgia, but really a lot are going into metroplexes like the Dallas Fort Worth, the Los Angeles, the Atlanta, but they're going about an hour away from that metroplex, whether it be north, east, west, south, whatever have you. Because once you get about an hour out, maybe not in LA County, but other areas, prices drastically drop, and you still have basically all the stuff you still need.
Yeah. Yeah, like even in LA. Well, first of all, in LA and San Francisco cities, it's even you're saying it's even worse than living outside of the city, which I don't know, it just seems like they're kind of kicking themselves in the foot by doing that, but it's like ultimately people aren't going to want to like live there if it's not good for and that's why a lot of the people like Elon Musk and I
Yeah.
think I've even heard maybe Mark Zuckerberg might be moving out. I don't know, but a lot of people are going to be moving out. It's like you don't really want to live in a place that's charging, bad for your money or whatever, right?
Yeah, a hundred
Yeah.
percent, 100%. As they say, you don't want to, you feel like you're getting hosed, as some people say. They're just getting me from all different angles. And the reason I say in the cities, because of course you have income taxes you pay for the state. Some cities also have income taxes, depending on what city you're in, right? And then on top of that, they have typically a higher sales tax. So instead of paying a 6.75 sales tax percentage somewhere else, you go into the city, now you're paying an 8.75. So it's not that big of a difference, but if you're doing a lot of buying, the food, the grocery store, depending on what's exempt and what's not, then you could be looking at just paying more every day for the typical stuff you need and utilize, which makes your housing or your living expenses that much higher as well when you're in those cities.
And then on top of it, it's already expensive in the city,
Yeah.
so it's just like unbelievable. But yeah, and some people will say like if you move out of the state, like it might be cheaper, but you're also probably going to make less. Like, do you find that to be true? Like you might move somewhere, but you like your salary gets cut in half or maybe like 1.5 or whatever.
Yeah, I would say during COVID, of course not. Like like 2 to 3 years after COVID, no. People were moving jobs, moving places, keeping the same pay, if not getting higher, right? Now with the crackdown, where more employers are starting to let go of employees, it's starting to get harder to find a job. Um, it's it's a little bit harder on the in employees, where if they do leave, they may not get the same pay. They may sacrifice a little bit. Employers are starting to get a little bit smarter and start asking, where are you from? Where you live? And they find out instead of living in California where they have to pay you $100,000 a year, you live in Kansas, they're going to try and probably offer you about $70,000 a year. Because they know you don't need as much to live off of. It all varies on employers. Not all employers do that. Some do when they're negotiating with you, but it's always a negotiation tactic. Especially if you live in Kansas and the job listing says between 70 to 100, I wouldn't accept 70 unless I had no experience. If I had a good amount of experience, I could plead my case. Now I'm going to go to that person and say, hey, with me being in Kansas instead of California, you're going to save because you don't have to pay the California taxes here. You don't have to do this in legislation. You don't have to contribute to this. You don't have to give me health insurance and all that. And then you can start negotiating with them to get that higher salary. But it all depends. That's a long answer. Short answer, no, I haven't seen it change too much.
Okay, and then in terms of just like the living situations, I've heard that
Hmm.
um I think I've heard Dallas for the most part is fine, but in some places in maybe Texas or really anywhere, like they're like, yeah, it's cheaper, but then the living is like the weather or whatever is really bad. You get a lot of like storms or
Right.
whatever else. Is that true, or do you find it to be pretty comfortable living there?
I find it pretty comfortable. I'm from Southern California, where it's 70 outside with a breeze almost what 90% of the year, other than winter. Here, yeah, we see all four seasons, but I've learned I actually kind of enjoy all four seasons. And I realize I don't even go outside as much as I used to. Like when I was younger, always playing outside sports and that, but here it's like, yeah, I go outside, go to the grocery store, maybe go on a walk with the family, but I'm not actually hiking all the time. I'm not at the beach all the time. I'm not doing this, and if I do, I'll just make the drive down to Houston maybe once or twice a year. That's how much I went when I was 30 minutes away from it in California. So I would say I've enjoyed it. There are some storms that come in, but nothing that's makes you like unable to sleep, right? Everything else, just like, oh yeah, that storm will pass. Kind of like things that happen in your life. That storm will pass. Those days will go, and tomorrow will be a new day. So it's it's nothing that has negatively impacted us. And my wife, she's a storm freak. I found out she loves tracking those storm stuff and have it on her app and see what's going on. So she's actually loved that aspect about Texas.
Yeah, does it snow pretty hard there then?
No, so we're in the Dallas area. We get more snow usually than I think Houston and San Antonio and Austin. I think usually we get about 3 solid days of snow that entire year, right? That's with snow on the ground, and it takes a day to melt or something like that. And when it snows in Texas, typically everything shuts down. So far this year, I think we've had 2 days of snow. We may, or maybe 3 days actually. We may have one more by the end of this month. We're shooting this in February. After that, we won't have any snow again probably till next January.
So when you say storms, you mean like snowstorms or
Oh
like
no,
just
so yes, snowstorms are very rare. We had one in 2021, and that was like a freak accident, I think, of 100 years. The As far as storm, I mean like thunder, rain, lightning, and whatnot. And it's typically you see it off in the distance. You rarely see news of like a house getting struck or something like that.
yeah, which isn't really that big of a deal. I mean,
Yeah,
you
just pay
know,
that insurance, you'll be fine, right?
yeah. Well, no, I mean like this like if I mean storms in general, like it's not like that bad, and like if it only and I like the snow, so I mean like you said, I almost like the four seasons. So, but yeah, so we've covered pretty much the living situation, but your main thing obviously is tax accounting, right? That's your
Yeah,
bread and butter, right? So let's get into that. So first of all, in terms of taxes, like I just wanted to ask you a broad question, like how do
yeah,
taxes work? Because I kind of feel like most people obviously know what taxes are, but they don't really know, the difference between how much each, group gets paid and then where their taxes go to. And, like they kind of just, give them like give their 15% or whatever,
yeah,
whatever it is to the government and like don't think about it. So how does taxes work like in general with all that kind of stuff?
yeah. So I would say um, the way taxes typically work is we have what's in the U.S. called a progressive system, meaning imagine you have different buckets, and buckets are how much when you earn, you put money in that bucket, and the first bucket's going to say 12% taxes. The second bucket, let's say 15%. The third bucket's going to say 20%. And you can only fit so much cash in each bucket. Once one bucket's full, say 10%, then you start putting in the next dollar in the next bucket. And what that basically is saying is if you're in the 22% tax bracket, for example, you're not going to pay 22% taxes on everything from you made all year long. It's only going to be 22% over a certain dollar threshold, or whichever how many dollars you put in that bucket. And that's what we have in the US is a progressive system. There's different tax rates. People say, "Hey, what's your tax rate?" Typically what they're talking about is your marginal tax rate. And those are the tax brackets you see IRS posts every year. But your effective tax rate is what's most important. And the effective tax rate basically tells you, hey, Micah, this is how much you exactly paid in taxes percent-wise last year. It takes into consideration all the buckets that you put money into. And even though you filled up the 15%, you almost filled up or say you filled up the 12%, you almost filled up the 15%, it'll say, hey, your effective tax rate may be 14% or 13.2% based on how much you filled up of each bucket. So it's a progressive thing. I've met a lot of people that say, "Hey, I don't want to raise because I don't want to be in that 22% tax bracket." And it's like, no, that your whole income doesn't now be taxed at 22%. It's just the next dollar over that dollar amount. And the way it typically works, like where your money goes, unfortunately, we have no say in that. It'd be nice if we did, but Congress is going to decide how much they want to send overseas and how much they want to keep in the US, how much they want to give back to states and invest here and that. And we're probably still going to have a deficit, unfortunately, based on it.
Yeah, so like even that is complicated. And that's why like I'm probably not good at tax accounting, but or accounting. But in terms of the different the brackets, like what are the different brackets like in terms of I forgot the term like wealth brackets or whatever that people how much people the percentage that people pay based on what they're making. What is the amount the amounts?
Yeah, so those are the tax brackets, your marginal tax bracket, and it changes every year. I'll be honest, I don't even keep up with them. I don't memorize them because it's one of those things where the software is going to calculate that aspect of it. And then when it comes down to planning, you just kind of quickly look it up because, like I said, it's always changing. But you can easily go into Google if anyone's ever curious and just type in 2025, 2026, whatever year we're dealing with, marginal tax brackets. And then they'll give you, hey, if you make between this dollar amount and that dollar amount, it's going to be taxed at 12%. This dollar amount through that dollar amount is at 15%, and so forth, all the way up to the highest tax bracket.
Okay. So okay. And then where does the where do the taxes go? Like I know like some of it goes like Social Security, some of it goes to Medic Medicare, and
Mhm.
then and that's pretty much kind of like for you that goes back for you when you get older. And then where else do we know that it goes?
Yeah, so your taxes are broken down in different categories. So if you look at your W-2 pay stub, you're going to see one line item that says Social Security, Medicare, unemployment, disability, all the whole nine. And at the top, you're most likely going to see income tax. Your income tax amount, that goes to, like I said, wherever Congress wants to dictate that money goes, however they want to spend our money. The other line items of Social Security, that goes to paying people on Social Security right now and hopefully pays us in the future if it's still alive. The Medicare, same thing for health care and whatnot. And then unemployment. So you'll see sometimes sometimes you as an individual pays unemployment taxes, and sometimes your employer pays unemployment taxes. Well, the unemployment taxes says if you file for unemployment, you get paid X amount of dollars for however many months if you are terminated. And think of it almost as insurance for the unemployment tab. And that gets paid it goes into a bucket, everyone pays into it, and then it goes out to anyone that needs to take money from that bucket because they're unemployed. I would say those are the majority of areas that our dollar is going to when we have the withholdings taken out of our check. But yeah, it seems like there's always a joke. It's always that 16-year-old kid that gets his first job and he's talking to mom and dad. It's like, who who's FICA and who's Medicaid and or Medicare? Why are they taking all my money out? And it's like, well, welcome to Uncle Sam and the different routes of taxes they have.
Yeah, and then in terms of like you said, where the money goes to them, like how they spend it, do they not have to like pretty much tell us at all, like where the money goes?
I'm not 100% sure on that one, to be honest with you. As far as I know, I can't go and say, "Hey, I paid $100,000 in taxes. Tell me where it goes." I can't do that. I know that for sure. But what I believe you might be able to determine is like how much they spent on different categories and committees and things like that. If you really track Congress. which not everyone has the time to do, right? But if you really wanted to go in there, you get to see what bills they're doing. Oh, they just paid, passed a $10 billion bill to reduce property taxes for all of the country. Let's say hypothetical. Then we know $10 billion just went to that, right? But that's as far as I know, that's really the only way to kind of determine, estimate where our dollars would have went. But we're always in a deficit, meaning we're spending more money than we're bringing in taxes. Hopefully that changes with the tariffs, but we'll see.
Yeah, and then in terms of the Social Security,
Hmm.
I feel like obviously pay into Social Security and Medi-Cal or Medicare. I always get those two mixed up.
Me too.
But like I don't really know how much I'm going. Like I don't even. I probably should look into how much am I going to have, but how much I guess should I plan to have if I'm putting tax money into Social Security and Medicare? Like how much am I going to get back from that? Is there? I know there's a way to like look it up or something, but like just roughly, if you're able to.
Yeah. Unfortunately, I couldn't throw out a number because it varies on how much you made. I think it's like the past 40 years or past 20 years maybe, your top earning years, um, and how much you paid in. They have a calculation, but I believe the Social Security Administration can run a calculation to determine if you retire at X amount year, how much you'll get paid in benefits. And that's assuming, which I think it will still be around. Social Security will be around at that time.
But some people think that like it won't, right? So a lot of people are,
Yeah.
yeah.
Yeah, a lot of people think they're just because they don't their bucket is dwindling fast, and they expect them to run out of cash. I think by 2030 or 2032, unless some changes are made, um, and they think it may not be around. I'm pretty certain that Congress will make a change because they don't want grandparents, older individuals not working, providing to the economy, but then now having the next generation have to take care of them and spend their money on that. And without Social Security, that's what's going to happen, and it's going to really hurt the economy if, say, everyone between their 30s and 40s need to take care of parents, so they work less, take on different jobs, or they just have to leave a job to take care of parents.
Yeah. And then in terms, I mean, if you had to like, if I've been working, let's just say I've been, like, I kind of like just as like an estimate, if I've been working, let's say I think I've heard that if you pay into Social Security for more than like 10 years,
Hmm.
I think I've heard you get it. Do you know if that's true or if there's a certain amount of
I
time?
Yeah, I believe so. I think it is 10 years, I believe. I don't do too much on the Social Security side of things with benefits. I usually allow like financial advisors, which hopefully later this year will be offering those services to handle the Social Security, best timing, percentage, and so forth from there.
That's kind of like, yeah, that's kind of like a separate thing than tax accounting, right? That's more of like an investment type thing.
Yeah, as far as
Yeah.
your benefits, yeah, 100%. As far as taxes coming out for Social Security, you're going to have it's 6.2% come out of your check in taxes, but then your employer is also going to pay a 6.2% just for Social Security itself.
But you would have no clue how much somebody like me or yourself maybe would even have by the time you get it when you're what, 65 or something?
Yeah, I think the earliest you could get it is either 65 or 63. I think 65 is considered full retirement age, so you could get a good amount at that point. And if you wait till 67, you can make even more per month. But then you run the gamble of how long do you think you're going to live?
So you wouldn't even be able to like do like an average, like for yourself or for me or the average person would make $2,000 a month in Social Security, or that it's too hard to say.
Yeah, it's hard to say. If I pull up like clients right now on Social Security, I would say they range between, depending on their lifestyle, about $1,500 to about $2,400 per month in Social Security. And I'd say that's where our typical client will fall as far as benefits when they retire, and what we're filing right now.
And would you say that you could live off of, do are most people able to live off that alone? And then what do they do if they can't?
Yeah, if you can't, you try and get assistance from the government or assistance from your family. But if not, you're going to have to really drastically change your lifestyle, unfortunately. Majority of clients that we work with, they have that, and they supplement other retirement savings that they had with it to live a comfortable life. But if I mean, for me, if I made, say, me and my wife were on Social Security, we're bringing in, say, $3,500 a month. I had no retirement account, and my house was completely paid off. I think I truly think we would be okay, but we won't be taking all the trips we want to take in retirement, right? We may have an additional $500 left over per month after we put money aside for the high Texas property taxes, for insurance or HOA or repairs to the house and car insurance, all these other things. But I truly think we'd be able to make it work. It'd just be really tight.
And you would probably have to own your house,
Yes.
right? Like
Oh,
if you
yep.
don't own a house, then you're probably not going to be able to do it. And
Yeah.
so it's just kind of crazy to me to think like if people hit that age, they don't have savings and they're just getting Social Security
Hmm.
and they don't have their house paid off. It's kind of like what like does the bank come in? Will the bank come in and take their house away and they're
Yeah.
70 and
So,
homeless, or like what
I
happens in
mean,
that
if
situation?
yeah, if they stop paying, some banks will. They'll come in, take their house, foreclose on it, and potentially they may get a check depending on how much equity they have in the house. But sometimes they may not. But a lot of older individuals do what's called a reverse mortgage, and they have this home. They realize they don't have enough money to live off monthly, so they do the reverse mortgage, so they have more monthly income. But sometimes on the back end, they get the short end of the stick for that reverse mortgage.
So basically, the reverse mortgage is where somebody comes in, buys your house, and pays you what, um, what they pay you what you own on it, or how much do they pay you?
Yeah, so my understanding is you would basically saying, "Hey, Micah, you have a house and you're at the point where you really need money. You're in retirement." I'll say, "Hey, Micah, I'll buy your house and I'll pay you $1,500 a month extra until you die. But once you die, the
Uh,
house is mine, right?" And then they'll pay out a certain amount to their heirs and whatnot. And from my understanding, that's what a reverse mortgage is to help someone have more income monthly. But then your estate and your family, they could lose that asset or they think they would have when you pass. But my thought process is always, hey, when I die, I want $0 to my name. I don't plan on leaving my kids anything. You go make your own money. I just want to, I want to spend it and enjoy my life. As I tell my parents, spend your money, enjoy it. Don't leave me a dime. My kids, if you're, you know, my goal, if I pass, they're in their, 30s or if not older. And by that point, I should have set them up knowledge wise to be good enough to self sustain on their self. Don't rely on my penny, my dollar. If you get something, great, but don't look for it.
yeah, that's a good. I think that's a good ethic to have. I living in Southern California, I have a lot of friends that they're they have a lot of money somehow. You know what I mean? Like,
Hmm.
and it's probably and it comes from their parents. You know what I mean? And it's kind
Yeah.
of like astonishing to me. You know what I mean? Because, I mean, I have friends. You mentioned like teachers. I have friends who are teachers, but they own these like really big houses in like San Clemente,
Yeah.
and I'm like, how are you? How are you able to afford that? It's like obviously it's most likely their parents, but
Yeah. Yeah.
um, which obviously the parent can give their child whatever they want, but I think that it's like a responsible thing like to do like what you're doing and make sure your kids you know are able to make their own money. In terms of
Yeah.
Medi-Cal, what do we get from that? Like, do we pretty much will that pretty much cover us once we hit 65 in terms of healthcare?
I'd be honest, I'm not for sure. I don't do too much in the healthcare space with Medi-Cal or Medicare, Medicaid, anything like that. I don't touch on it too often, so I'm not for sure on how it plays out. I do know for the individuals that are on those programs, it's tough sometimes to get a doctor or find an appointment, and the level of service that you're getting sometimes just you don't feel comfortable with some of the recommendations they're having and giving you, but that's all
For
you have, right?
Is that for Medicare or Medi?
From what I've seen, I always get it mixed up, Medicaid and
Same with
Medicare, but
me.
I believe it's Medicare.
Yeah, so even with Medicare, you still get when you're older, when over 65, you still get like kind of like cheap bad doctors or whatever because it's
Yeah,
yeah.
from what I've seen and heard and individuals I spoke with too, yeah, that's the case. And so we'll get people that say, "Hey, I need to start a business so I can start my own health insurance, so that way I could pay for better doctors." And those are the people that are, a little well off that have an extra $2,000 a month to spend for some health insurance. But sometimes it's a peace of mind knowing I'm going to higher end doctor than someone that just will give me any and every advice, because sometimes those doctors, no harm to them, but when you're dealing with back, 4 appointments per booking slot, like you just run out of time to do your due diligence sometimes on every little thing. You just kind of give them what they need or pills and keep on going. That's not all doctors, but fortunately, there's a lot out there like that.
So like, do you plan when you hit that age, do you plan on kind of still having your own insurance, or like, do you think you'll even want to use Medicare?
Yeah, for me, I haven't even thought about it. I'm considering going into like getting some long-term care insurance, just kind of take care of us if something like that happens. But for the most part, I may just end up using Medicare at that time, because it's one thing to have um, it taken care of for you by the government. It's another thing to pay an additional $2,000 per month or whatever it may be out of your pocket for health insurance you may use 2 to 3 times a year. And some people, they may need it because they have some major medical things going on. But for me, I don't know if I really will need it. And I'll take the trust and advice of that doctor at that time. And if something really goes wrong, where I really want an expert on something and Medicare won't cover it, then I'll probably start a business, get my own health insurance, pay for it for a year or two, and then, go find that higher end doctor and see if they give me better advice.
Is it literally that easy just to like start your own business just to get like health insurance though? You know what I mean?
You have to have income. It can be that easy if you could generate income, right? So, say I'm 70 years old and I wanted to do this, I'll probably start an accounting firm, find me, I don't know, 25 clients, try and make $10,000 to $20,000 a year, give or take, with those clients, and then just use those funds to pay my health insurance, depending on what it may be at that time. Could be possible.
So is that like a better way to go to start your own business to get health insurance? Is it cheaper that is do you bring that up as it's cheaper to do than just to go out and get health insurance, or what would be the reason for starting the business to get the health insurance?
Options, really. It comes down to options, as far as you have the possibility, you have the option to pick this health insurance plan versus that health insurance, PPO, HMO, which doctors you want to talk to and speak with, because not all doctors take the right insurance. And that's really what it does. It just gives you the options to pick what you want and you feel comfortable with when you go to that healthcare provider.
Okay. And then in terms of 401k, do you think the 401k is a thing that you should be doing or not?
Yeah, it depends on your lifestyle and what you want, where you want to be in the next few years, right? Or where you even want to be retirement wise. 401k, I would say contribute up until the amount your employer matches it. That's a given. Get the free cash, put the money in. However, if you think you're going to retire early or you want other money for different types of investment, then don't lock up all your money in a 401k. For the average person, it is better to put your money in a 401k, leave it alone, set it, forget it, so that way you don't end up spending it or doing incorrect things. Because there are so many people out there that think they're not average, but you're the average person. Put the money in the 401k, be done with it. But if you're one of those, say, hey, I want to retire at 55, well, don't put all your money in a 401k, because when you get ready to retire at 55, if you try and take that money out, unless it's in a Roth account, you're going to hit with penalties, additional taxes, and other issues until you reach that age 59 and a half. So it all depends on what you want, when you want to retire, where you want to go, and what are your plans?
Yeah. I've put money into it, but then I don't know. I always kind of end up getting kind of like irritated with it when they're like, when I want to get it out, it's kind of like a hassle, and then
Yeah.
it's kind of like it's my money. I want to be able to do with it what I want, but then they're like, oh, you're not supposed to take it out, and so I haven't really dealt with it recently. But also um, up until recently, I've, for the most part, just had like regular jobs where I just pay the taxes and
Hmm.
don't really think about it too much. But recently, I've been doing like kind of like Amazon Flex and like kind of like more gig work
Yeah.
where I'm like an independent contractor. I like it more because it's like, I'm my own boss. I work when I want and all
Hmm.
that kind of stuff. But then also, I've also thought about, taxes and stuff like that. So in terms of somebody, and I'm assuming too, you're probably an independent contractor too, right? Or like, um,
Yeah. So I have the business, so I'll be the business owner. But yeah, very similar.
yeah, yeah. So for somebody like you or me who isn't paying the regular taxes, like, what's the best way to go for taxes?
As far as payment wise, make sure you have money and things like that.
Yeah, well, so okay, so last year was the first year that I kind of was doing this most of the year. I did have a regular job part of the year. I thought I was gonna end having I thought I was gonna have to pay a bunch of money, but it turned out like I somehow didn't.
Hmm.
I actually kind of got money back through Jackson Hewitt.
Nice.
So I don't know if that's I don't really know what's gonna happen again. Because I think the main reason is because I'm driving around so much. I'm using my car for gas and wear and tear on the car. Should I plan this year on kind of also getting money back, or I have no clue how much if I'm
Yeah.
gonna have to pay money or if I get money back.
Yeah.
You know what I mean?
100%. And it's very tough. It's really tough to kind of decide that and know what you're going to do. And what we do for a lot of clients, we do like a mid-year tax projection. So that way you're not surprised at the end of the year, right? And when it comes down to that, oh, excuse me, what we typically recommend is every month you look at how much money you brought in from, your independent contractor work or your business, and then subtract your expenses, whether it be mileage, whether it be repairs, whatever it may be, supplies. You subtract it from that and determine what your net income is. So after all your expenses, you get your net income. Based on that net income is what I would say you want to pay taxes on, and put about 30% aside. That's a conservative number. 30% for taxes of that net income. So let's say this month you drive around, you do, let's say, $11,000, right, in income this month. That would be a hell of a month, right? You only have $1,000 in expenses. So your net income would, in this case, be $10,000. $11,000 minus the $1,000 get you $10,000. Well, you want to put a 30% aside for taxes. So that's $3,000 you want to put away for taxes when you get ready to file your tax return. Now, you could file and pay those taxes early, what we call estimated tax payments. That's what most people are supposed to do. Not everyone does it, but we recommend it. And that's how you keep track of kind of throughout the year how much I think I will owe by doing that. And you're usually with 30%, like I said, it's conservative, but it's a good place to start.
Okay, but for someone like me who, like I said, somehow I ended up with money last year. Like I said, I did have jobs for part of the year, regular
Mhm.
jobs where I was paying into it. Does it sound like basically just based on my job, I probably will just be getting money back because, for one, I'm not making a lot of money. I'm spending a ton of money on gas and wear
Right.
and tear. Does that make sense that I would actually get money back? And if I do get money back, it almost seems kind of weird to me that I literally not even paying into taxes like at all. Like, you know what I mean? Or is Jackson Hewitt
Yeah.
just able to like work some magic or something? Or like,
Right. I mean, with taxes, if there's any magic involved, be concerned. But it's one of those things where it all depends on what's there, right? So if you have your W-2 job and you paid a lot in income tax there, you could have already been planned to get a refund. But depending on how much documents you gave to Jackson Hewitt, H&R Block, any of the other companies, TurboTax, what you gave them in your income and expenses is what they'll claim on the tax return. A lot of times they won't have this conversation with you, and if you gave them a bunch of expenses that is higher than your income, then it's going to show you had a loss on the business. And that loss will then offset your W 2 income, reducing your W 2 income and what's taxable. And if that happens, then the withholdings that you've made throughout the year are probably going to be in excess or more than you should have because your income came down from what was anticipated. And so that's sometimes what could happen. But I would say in most cases, usually if you're doing gig work, depending if you're taking mileage or actual deductions, usually you at least have some profit on that Schedule C, what we call it for the business, because we call it a business if you're an independent contractor. Shows some profit that should have some taxes on there, but not in all cases. Sometimes there's not. There's always circumstances where it's not, and it creates a loss to reduce other income.
and by a loss, do you mean like I literally lost money on the the job, basically on the.
Yeah, yeah, and you could lose actual money, or you could lose what they would call sometimes is what's it called? It's called a basically a paper loss. Basically saying you didn't actually lose money, but tax wise, based on how the IRS classify things, you did lose money. And a lot of times that will come into play if you're doing a lot of mileage. So let's go back to the example of you making $10,000. If you had a ton of mileage, um, where because the mileage gives you a big deduction, you say you make $10,000, but mileage you drive 20,000 per year. That's going to probably give you somewhere around $13,000 in deductions for the year. Well, that's clearly over the $10,000 you made, right? You're going to have roughly a $3,000 loss. That's sometimes how mileage can create a loss for an individual that's doing a lot of driving. But it's only if you keep track of your mileage throughout the year they can utilize that. And that's a
It's
paper loss.
so it's kind of confusing. So I could technically make, like, I obviously make money on the job, but it's still technically a paper loss to the IRS because of, yeah, right. I mean,
Yeah.
so even though
Yeah.
I made money, it's still a loss in terms of taxes,
Yeah.
but
Yeah,
not
exactly.
yeah, yeah.
Yeah. And
And then
it all depends on the expenses and the mileage and everything you have going on. Now, mileage is one that could create that, but if you do your actual expenses, technically it shouldn't create that, but sometimes it can as well.
in terms of um, what was the next question? So like in terms of yeah, so in terms of like this year, if let's just say I do the gig work the whole year, do you
Mhm.
think that I should? I know like you can't answer the question, but do you? And it's like the driving job. Like, should I expect to pay money, or do you think it'll be the similar to last year, where like I actually get money back? I know it's
You,
hard to say, but
yeah, you usually for clients, I say expect to pay money because in
okay,
most cases they will have a net income that they need to pay taxes on. Some cases not, but I rather tell you yes, put some money aside than oh surprise you have a $10,000 tax bill. That's not as fun, especially if we don't have the money ready for it.
yeah. And then in terms of Social Security and Medi-Cal, like, am I still paying into that? And if not, how would I guess, kind of like be able to still
Yeah.
get those things? You know what I mean?
Yeah, great question. And this is an issue a lot of business owners end up running into, right? Because for business owners, they don't have they don't always have a W-2. Sometimes they do coming out of the business. So when they get ready to pay the Social Security, Medicare taxes, yes, you're still paying it, but it goes on your personal tax return. And it's going to be labeled as SE, self employment taxes. And that's where you'll pay your Social Security, your Medicare, but you have to pay it not just for yourself as an employee, but also as the employer. So earlier I said, hey, you have that 6.2%. Well, you have to pay it for yourself, and then you have another 6.2% you have to pay for the employer. IRS gives you a deduction, but you still have to pay it. The total in self employment tax is technically 15.3%. And that's how much you're going to pay per net income dollar that you have. So after all your expenses, you have $1,000, you're going to pay 15.3% in taxes, $150.30 in self-employment taxes. That's doesn't involve income taxes. 'Cause that's a whole nother calculation, but that's just self-employment taxes.
And would I have to do that on my own separately? Like that doesn't automatically get taken out?
Correct. Yeah. So I think it's at $150.30, $153. But yeah, you would have to pay manually and by yourself to the IRS, either monthly when you make those payments to them, or excuse me, quarterly when you make the payments to them, or at the end of the year when you say you get a big fat tax bill for $10,000. Well, of that $10,000, a portion of it's going to be self-employment tax, then a portion of it's going to be income tax. And then you're just going to pay a big chunk to the IRS. Then they will take part of that money and say, hey, Social Security Administration, here's your cut. Hey, Medicare, here's your cut. And they break it up like that, and you'll get credit for those taxes that you pay to them that way.
But I mean, does that happen automatically, or do I have to kind of like go online and?
Yeah, after you pay it manually, the rest will happen automatically.
So I don't have to do any. I don't have to do anything else to pay into to Social Security.
Correct. If as a business owner, correct. The IRS will distribute it to who they need to based on the information on the tax return.
Okay, and in a situation like I said, where last year I ended up getting money back, will money still get put into so like that's what's
Yeah.
confusing to me is it's like even if I'm getting money back, money will still be get put into Social Security, even though I'm paying nothing for taxes.
Yeah, so when we say we're paying nothing in taxes, it's usually income taxes, because there's different types of taxes we're paying at the federal level. It's usually income tax when we're saying we're not paying anything. However, on your W-2, how much you paid in Social Security and Medicare, no matter what else happens, that stays the same for that year. That's how much you paid into it. You're going to get that credit. Even if on your business you say you had a $15,000 loss and it helps reduce your W-2 income to reduce your taxes, it's only going to help reduce your income taxes, not your Social Security and Medicare taxes, because those are already set in stone, already where they are, based on your W-2. Now, your self-employment side of things, since you had a loss, you don't have to worry about paying more because you had a loss, on the business side or the gig work side of things. So it that business income that creates that loss will offset your W-2 income, but only reduce your income taxes. It won't impact your Social Security and Medicare taxes.
By it won't impact it, it means that like I'll still be technically paid into those.
Correct. Exactly.
Okay. It's confusing because it's like if I'm not
Yeah.
paid into it, how is money getting put into it? Like, is the government just does that make sense? Like
Yeah.
if I'm not paying taxes per paycheck and then I somehow like don't pay taxes at the end of the year, I've paid no taxes. I've actually got money back. I'm kind of like, how am I paying anything into Social Security and Medi-Cal? You know what I
Yeah.
mean?
So in that case, sometimes you didn't pay anything into it, right? And I'll give you an example. Let's say a hypothetical client I'm working on. They didn't have a W-2 job, so they didn't make payments throughout the year withholding from their W-2, right? But they had a business, and that business lost $5,000, so they have no self-employment tax, so the business didn't make money, it lost money, right? But they still got back a refund of $400. Like, what the heck? They didn't pay in anything. What's going on there? And that's where credits come involved. And that individual, based on their circumstances, they got a $400 credit for uh, you know improving their house, doing an improvement for electricity, or electric improvement. So they still get back money, but they didn't pay anything into self-employment taxes, Social Security, Medicare, income taxes. They paid nothing into it. So they got no credit that year because they didn't pay any taxes into it, but they got a refund.
Okay. Yeah, I mean it's confusing and I think it's kind of like
Yeah.
hard to get the correct answer for it because I mean, obviously each situation is different than
Yeah.
others. So like you wouldn't be able obviously to tell me like what's gonna happen with me because you're not looking at my stuff. But
Mhm.
um yeah, I'm just kind of like I want to make sure that I am paying into that. And then is there a way for me to like I don't really like how the it works with the independent contractor. I don't even know what's that called when you're an independent contractor, but not W-2, but I-9 or
It's you receive a 1099. Yes.
1099. It's like is there a way that I can be like, hey, like can't you guys just like tax me as I go? Like why aren't they I don't really understand like why aren't they taxing me as I go like they would at a normal job? Like why are they
Yeah.
making it so I have to do all of it at the end of the year? You know what I mean?
Great question.
And
Yeah,
is there
and
a way that I'm able to do that? Like get them to do that?
yeah, I believe you could go to the person paying you as a 1099. Not many people will do this, and most people won't do it, and say, "Hey, when you pay me to my 1099, I want taxes withheld." But they'll only just take a flat amount and just say, "Hey, I paid you 10,000. I'm going to send $1,000 to the IRS, so you're only going to receive $9,000, right?" So that I believe you can do that as an option. The reason that they don't make everyone do that is because, when you're receive, let's say you do some work. Micah, you come work for me, right? I'm going to pay you a 1099 for this podcast, and I'm going to pay you $1,000 for this work, right? Well, instead of me paying you $1,000 taking out the taxes, well, you're like, hold on, wait a second, I have expenses. My Zoom account costs this much, my microphone costs this much. I traveled out to see you, Joshua, just so we could do all this stuff, right? And in total, it cost me $1,200, and you only paid me 1,000. Well, now you're at a loss because you're theoretically your business. So the IRS allows you to determine, okay, do you have net income after all your expenses? How much do you truly have before determining how much you need to pay them? Because if not, I've seen a lot of people receive 1099s for, you know, one guy $300,000, right? But he had so much in expenses, his net income after all his expenses, he really only showed he made about $60,000. Imagine if they were taxing him on all 300,000 before his expenses came into play. And so he would have overpaid. He wouldn't have enough money to live his lifestyle, pay for his other bills and whatnot. And that's why they don't just force everyone to take stuff out, even though it would be easier for most people. Some others it could be harder.
Yeah, I think that like most people just don't really want to deal with it.
Yeah,
Obviously, like you're saying, some if you're making like if you own a company and you're making a ton of money and you want to do the taxes, that's fine. But for most people, I think they just it's kind of like just take what you need and then let's move on. I don't really want to have to like deal with doing taxes at the end of the year. But yeah. So in terms of the so yeah, we've covered the 1099. In terms of the regular person who's just getting a W-2, what's their best way to go about it?
yeah.
I think it's a lot more simple with that one, right? But
100%. And I would tell you, like, if you have a W-2, no other tax forms, no other complications, do it yourself. Like, save some money, do it on TurboTax. Maybe H&R Block will do it for free, maybe, and just have it done that way, right? But for the most times, if you're a W-2 employee with nothing else going on, you're in a box. There's nothing we could do to help you, save you tax wise. There's no complex matters that we could advise on. But in some cases, there are. So for people that take money out of retirement accounts, they have investments, they do this, that, and the other, where it gets more complex, then yeah, you definitely need to give us a call and work with us. No one else, just us, right? But it's just one of those things where it's like you're just W-2. Most of the time, you're easy, straightforward. Just do it yourself. And I recommend people that call me. It's like if that's all you have going on, I recommend just doing it yourself. You're better off. Or it'll be cheaper. Put it like that.
in terms of I know I think the only option you really have is either doing like zero, one, two, or three or four or whatever. What do you think the best thing to do? You know, the number that you put in or
Yeah.
whatever, which I never really know what to do. So I think I usually do zero or one. I think with zero, they take out more money and you get more back. And then with one, as it goes up, they take out less money, and then you may
Yep.
have to pay more. Yeah.
You're 100% right. And that's how it used to be before they wanted to simplify it, right? So in 2020, they changed the form. And so now the form's W4 form's a lot more complex. So you can't just now just put like 0, 1, 2, 3, 4, 5. Now you have to start doing math and saying, oh, I have this child and that I get this credit and I have this income. They tried to do that so it became more accurate, but really it just kind of hurt people more, for the people that didn't know how to handle the full form. So I would say everyone's a little bit different. If you want to be safe, then sorry. Just sometimes you just go through the form and just put zeros. I think it's box like 4C. Don't quote me on that one. But one of the boxes you just put zero, another box you put zero, and you sign and you're done. And they'll take out the max amount in taxes. If you really want to get fancy on that, we do what's called W4 recalculation to have them withhold the exact amount. So that way, by the end of the year, you hopefully are at $0 you owe to the IRS and $0 you're getting back in a refund, because throughout the year it will spread out. You have more money to live on.
Yeah, it seems like yeah, doing zero is the best, but then it's always nice getting more money back as opposed to less or having to owe. Um, yeah, it's
Yeah.
complicated. But then what about if you have kids? Like if you have
Mhm.
kids, that number maybe you might want that number to be higher or
Yeah. If you don't want as much taken out of your check month to month, then you would want to put, which is like it's a new line item. It's called like the child credit, $2,000 per child. You just put, if you have 4 children, you'll put $8,000 there. So that way they adjust your withholdings on that, and they would take out less money from your check. Right now, excuse me. At the end of the year, you either want to. Most people want to be close to zero. If you don't want a refund, or at least too big of a refund, because IRS doesn't pay interest, right? If they owe you $5,000, great, but they're not paying you interest, the 5% you could have been making on that, or 10% in the market, whatever it may be. So for the average person, they want to get to zero. That's the sweet spot.
okay. And then in terms of having kids and then also being married,
Hmm.
how much do you it sounded like you said either it sounded like you said 4,000 per child that you get that is that taxes that you get back or taxes that you don't have to pay into or how does the having the children thing work in terms of the taxes
Yeah, so you get
and then also being married.
yeah. So being married, you get a higher standard deduction. Um, which is beneficial for the majority of people because I think right this year it comes out to be about $28,000 or $29,000 if you're married filing jointly. As far as children, you get the child tax credit. And on the W-4 form, you'd want to put in, there's a box there. You says how many children multiplied by 2,000. If you go through the instructions, and it'll say, for example, if you have 3 children, you multiply by $2,000. So that'll be $6,000 you put in that box. So that way, when your HR department takes this to put in the system, they can properly calculate your withholdings, assuming you have 3 children, and you will receive a $6,000 credit at the end of the year.
Okay, and by a 6,000, I always get like confused on it. By a $6,000 credit, does that literally mean you're getting $6,000 back, or
Not necessarily. It just means that your total taxes will be reduced by $6,000. Right. So if
which
you
is a
have
good amount, right?
yeah,
So yeah, you could potentially be getting a lot of money back
yeah.
if you have kids. Yeah.
Yeah. The more kids you could be getting back, other credits you want to qualify. You always want to get credits in business, in individual taxes. That's a dollar for dollar reduction in your tax, and sometimes can give you a refund. If you deductions are not dollar for dollar, right? So if I have a deduction of $1,000, it's not going to give me the same tax benefit if I have $1,000 credit. It's just the credit's going to be so much more powerful.
Okay. And then in terms of the deductions, it's all confusing to be honest with you. But
Mhm.
if I like, let's just say I spend $5,000 in gas or something
Mhm.
for my driving job, and I say I have a total of a $5,000 deduction. That is, like you just said, that doesn't necessarily mean that I'm getting 5,000 back. That means that that's the thing is I don't even really know how that would work. Like if I have $5,000 in deductions, how would that play into the taxes?
Yeah. So the deductions, there's different type of deductions. There's deductions that go against your business, and on the business side of things, you have deductions. So you have your income, and then your deductions are just a fancy word of saying your expenses, right? So expenses deductions about the same right there. Now, you also have on your individual side of things, you have what's really called adjustments. Some people call them deductions as well. But if it's not a business, it's on your individual tax return, you may have an adjustment. And adjustments are basically saying if you have this issue or you have this going on, you pay this much in this, we're going to reduce your taxable income. For instance, if you had student loans. You pay $2,000 student loans. You're in at a certain income amount where you qualify. The $2,000 you pay in student loans will be an adjustment to your income to reduce your income by $2,000. It's basically the same thing as a deduction, but it's called an adjustment. And that's how you reduce your income taxes you'll pay by having that adjustment. And there's certain categories of adjustments out there that you can utilize.
And that would be the same for like gas. Like if I pay 5,000 in gas and car wear and tear or whatever, basically they're just lowering my income by 5,000
For the business, on the business side of things, yes.
on the business. So, and that essentially means that I would just be put maybe into a lower bracket or
It potentially are you less taxes you have to pay on it, right? So if you have the $10,000, you have $8,000 in deductions. So now you really show you only have $2,000. You're only going to pay tax on that $2,000
and that would be 30. But does that like literally mean I only made $2,000 for the year or
for the business. Yeah,
for the
yeah. In that
business?
case, hmm
So let's just to make it easy, let's just say I make $50,000 a year doing my job,
hmm
and then let's just say I have um 10,000 in deductions. How would that end up? So I made $40,000 a year. I That just means that I would pay the taxes on 40,000 then,
correct.
and
So you would
that's
pay the
it.
tax on 40,000, and you would pay your self-employment taxes that we talked about, the 15.3%. And then whatever income tax we talked about at the beginning, whatever bucket you would be in, you would then put money in that bucket to pay that rate, that percentage of income taxes. Right? So you have to pay your self-employment and income taxes.
Okay, so it's what's confusing to me is like if I don't really know what's going to happen this year, but
Right.
last year, and maybe it was just because I had the other job, so that like offset it. But if I go to pay my taxes this year, Jackson Hewitt is like, excuse me, we're gonna the IRS is now going to pay you $500 or 1,000. I'm like, how is this adding up? Like, you know what I mean? Are they doing this
Yeah.
wrong? If I am making, if I made like 30,000 or 40,000 after deductions, how are they getting that? You know what I mean? Like, how are they getting to that number? How are they getting it to where I make money back?
Yeah, and it could be maybe you're getting some credits. Maybe, you have let's assume you have a child, or you made energy efficient improvements to a house you own, or you qualify for something to give you a credit. Let's assume that happened. Let's also assume that you made $30,000 from your W-2 job, but you paid $8,000 or $10,000 in taxes, right? An absurd amount. Well, after everything's said and done, everything gets netted. That's how you can end up having a larger refund based on those credits, based on how much you actually had withheld from your check and income tax withholdings throughout the year to result in you receiving a refund. Even though, even sometimes, even if the business lost money or if the business made money, that can happen. So there's
Okay.
yeah, they're just I just so confusing, but there's like so many pieces to the puzzle that can really change the picture that ends up being your income tax situation. Where I'm a visual person, where like visually, like if we had your return up right now, I could like go line by line, say, hey, Micah, this is what happened here, and this is why this happened, and this is what number changed it here, and this is what made you pay self-employment tax, but you had a loss, but it actually helped you, so you less income taxes, and we'll really be able to look at it. But for me, I'm a visual person, and it just makes way more sense if I could see it and look at it, and makes it easier as far as for me explaining if it's a little tough. I know I'm throwing out examples and numbers, but that's how would be, I think, the best way to approach it, because it is confusing. It is a lot of puzzle pieces matching, things changing. This affects this at category, but it doesn't affect that category. And then somehow I got a refund. And the tax return is kind of like showing, oh, here's the puzzle piece. Like here's the full puzzle, and this is how everything pieced together.
Yeah, I think it's complicated, and like I was saying in the beginning, like people pay their taxes and they know what taxes are, but they don't really know exactly how it works, and it's kind of just like somewhat scary or like unnerving. Like when I'm like, I just don't really know how much I'm gonna have to pay. I
Yeah.
know that I should probably save 30% of what I'm making, but I have no clue what's gonna end up happening when I go to whoever I'm
Yeah.
gonna go to, and yeah. So are there any good like loopholes in terms of taxes that people should take advantage of?
Yeah, and it all depends on kind of where you're at, what you're comfortable with, right? Because there's the real estate loophole. And this is why a lot of people invest in real estate, as we spoke about earlier. Is there's a lot you could do with real estate to write off against your other income. For instance, it's a hypothetical, but happens all the time. You have a husband; he's a doctor. He makes $500,000 a year from his job, right? He's a doctor. He makes good money. His wife is considered a real estate professional. They buy a property worth $500,000. Obviously, you get a loan to finance it and whatnot. You put down 20%, $500,000. Well, there's tax strategy called a cost segregation, where it now allows you to take a very large deduction on that house. So you buy it for $500,000, you do a cost segregation on it. If this was back in 2023, where it was a lot more, you could say take of that $500,000, you may be able to take a $150,000 deduction today, right, from investing in the real estate in the very first year. $150,000 deduction. Well, that $150,000 deduction can now offset that doctor's $500,000 W-2 income to really show he only made $350,000, meaning he's probably going to get a very big refund at the end of the year. But that's one thing a lot of people utilize is real estate. Now, it's also confusing because you have to qualify for a lot of this stuff, and a lot of people think I just buy real estate, I qualify. It's not always the case. However, real estate's a powerful one. Oil and gas investments are another powerful one that a lot of accredited investors invest in. Because if you put in, say, $100,000 in oil and gas, you invest in it, you may be able to deduct $80,000 of that this year, and then next year the oil well starts paying you year after year after year for the next 25 years potentially. It's how a lot of rich people diversify their portfolio, but it gives you tax advantages in that current year. Sometimes there's smaller stuff where it's like, hey, I have a stock portfolio. I lost $3,000 with Tesla. Maybe I sell that. Well, you can sell that, and that $3,000 will be a loss that you could write off against your W-2 income at the end of the year, depending on how else your portfolio and everything plays out. So I would say those are some like the things a lot of people utilize as far as the real estate and the oil and gas are big ones. Then the smaller ones are would be like the losses from real or the stock portfolio. There's other things business wise you could do that really help you once you are a business owner. The tax code really opens up for you on what you can do and tax strategies you can take advantage of. And it really just comes down to having that conversation with your accountant, that tax professional, and learn a little bit more about what opportunities are available for you based on where you're at now and where you want to go.
Yeah, it seems like most of those are probably more meant for like people who make a good more money than I do at least.
Sometimes, yeah, it's it depends because I have some clients that make 60, $70,000 a year that invest in real estate. They're just doing it in Ohio where their properties are $30,000, and sometimes they make it work, and that's how they build wealth. And other times there's clients that are making quarter of a million, $500,000. These absurd people working with tech and whatnot, where it works out a little bit different. Same situation, just higher numbers. But
Yeah.
yeah, I would say when you have a business and your business start producing net income, so after all your expenses, it's a good opportunity to start thinking, okay, tax wise, what advantages can I take care of? But if you're still creating a loss every year, it may not be time yet to do tax planning and take advantage of certain things that you may not be able to yet until you show that net income or the profit, some people call it.
Yeah. And then in terms of somebody like me, I don't have like a, and I think the majority of the answers to this is kind of like pretty much investments that are like the legitimate answers. But somebody like me who I have some, like if I get some extra money, I get like not a lot, but it's like,
Hmm.
1,000, 2,000. Are there any good ways to make money with my money? And it's not like not like I'm asking like go
Yeah.
buy property or whatever, but just something like on like a low end scale. Like I'm always trying to look for more ways to make money, and like I like playing poker, and I
Yeah.
feel like I'm pretty good at poker. And I know gambling in general can be bad, but poker you can win. And
Yeah.
so like I enjoy doing that. So like whatever I play, as long as I'm winning or at least trying to win. But anything else like that you can think of that just kind of like, I don't really want to say like fun ways to make money, but you know what I mean? Like kind of like
Yeah.
easier ways to make money.
Yeah, and it comes down to like side hustles. I think that's the biggest thing is what side hustles can you take advantage of what you're doing out there to make a little extra money is great because there you get the small ones where people are like, oh yeah, do a survey here, do this there, reviews here, make a few extra dollars. But I think it really the side hustles really it's like your bread and butter where you can figure out sell stuff on Etsy, right? Work with Amazon, do Airbnb arbitrage. What a lot of people would do with if they have no money, they do Airbnb arbitrage or a little bit of money. Look at investing in a business for yourself and investing in yourself. If you want the biggest return on investment, most of the time, it's investing in yourself to start a business. I would say a lot of people spend $2 or $3,000 for a course and then learn how to do something. Now they're making, $2 or $3,000 a month from what they learned from that course, depending on, how serious they took it. But that's one of the best investments for the average person. I would say, hey, max out your 401k as far as to your employer match and go higher if you feel comfortable with it. Start investing in the stock market, and that's like where I would say 90% of individuals should be at. And then the 10% after that is okay, let's look into real estate. Let's look into some other stuff if we have the risk tolerance, we have the funds. And that's another good place to start edging up to the next level, right?
Yeah, it seems like, and I've kind of heard it seems like with all the AI and apps and everything going around, it seems like it's becoming easier and easier to kind of like make money, online or whatever. Like you don't actually
Yeah.
have to like go somewhere. Um, but do you know if there's any? Like, I was kind of like thinking, is there any? I don't think there is anything like this. But you know how like credit cards basically, lend money and then they charge interest and they make money back. Is there a way
Hmm.
to do that like on a smaller scale, kind of like an app that like I may be able to like put money in and then they like kind of I know there's apps where they invest the money for you, but like
Right.
it's kind of hard for me to explain what I'm trying to say. But like
Yeah.
almost like an app where they might like lend my money out and then
Mhm.
I would get a percentage back. Do you know if there's anything like that, or for the most
Yeah.
part, do you need like a lot more money to do that kind of thing?
Now, there's ones out there. The one that come to mind right now, I think it's called Funrise. There's a guy on YouTube that does videos on his portfolio at Funrise over years. I'm pretty sure it's called Funrise. His name is Seth Williams. He's a land investor, actually, which is a great side hustle for a lot of people. That's another conversation for another day. But Funrise is a platform where you can go in and invest in real estate if you don't have enough money. Right. So you could go in and say, I have $25. I want to invest with Fundrise. That $25 now buys a portion of a apartment complex in Miami, Florida. Now you may own 0.000000001%, right? But it's a way to start investing in real estate um, if you don't have the funds now. Sometimes it pays off, sometimes it doesn't. Sometimes they got fees. It all depends like how it goes over time. And if you're small enough, a lot of times it's the better way to go. As you get bigger, it's better to go a different route.
Okay, yeah, that's like something that I'm like looking that I was that's something that I was asking about. And I feel like
Yeah.
when I've asked that question before, I feel like usually there's like not many answers to it. But funrise FUNRISE.com.
Or Fundrise.com. I'm on it
Uh,
right now. And
okay.
I would say that's a great place just to, put some money in there and test it out.
And so I could pretty much just go on there, put $100 into like you were saying, like a condo in Miami or whatever, and then I would just get
Yeah.
potentially get money back. I guess you could potentially lose money too, maybe, right?
It,
But
yeah.
yeah.
As far as I know, that's how it works, right? So I haven't necessarily used the platform, but I've seen some videos and people on it. I don't necessarily, this is not me recommending the platform. Let me be clear on that. I haven't utilized it. I'm not necessarily recommending it. It's an option out there for individuals that want to look more into it. I have no affiliate with Fundrise, but yeah, you could, from what I understand, you could just take some money, put it in there. You'll own part of that, either that asset itself or the business that actually owns that asset. Now, I do believe there's a lockup period with certain funds. And I think it's like, hey, you put in X amount of dollars, you have to lock that in place for 5 years before you could potentially sell it and get your money back. And yes, you're right. You could lose money depending on how the market plays out and what goes on in that area.
Okay, cool. Thanks for that. And
Yeah.
then in terms of being married, I know like being married helps with taxes and stuff like that. How does that work?
Yeah, so being married opens up sometimes some credits get higher for you. You have higher income threshold for certain credits. Your standard deduction goes up, and depending on the year and depending on what you have going on, being married could be great, right? So let me pull it up right now. The tax brackets for 2024. 24 tax bracket. Look at this accountant hard at work, right? I don't memorize this stuff, but so the tax bracket right now for 2024. Um, if you're, let me see, if you're here you go. If you're single right now, if you make $11,600 in 2024, you're going to be at the 10% tax bracket. However, if you're married, that's going to double, so it's going to be $23,200. So sometimes what happens is, especially in my case, if you're a single income household because the spouse is staying home, if you make $150,000, if I was single, I'd be paying the 24% tax bracket. However, if I made that amount and I was married, I'd be paying, let me see, I think it's technically the 22% tax bracket looking at here. $150,000 income over. Yeah, so I'd be at the 22% tax bracket. So there, it's a 2% difference. It doesn't make that big of a deal. However, if I was single making $50,000, I'll be paying 22%. However, if I was um, married making $50,000, then I'll be paying 12%. That's a 10% difference. So the bracket changes, things change. It's usually more of a benefit to be married filing jointly if you're legally married and have that option.
Okay, so basically just it's kind of confusing because it almost sounded like the tax bracket went up in terms of the salary, but then it goes down in terms of the percentage.
Yeah, so it will be for the tax bracket, it's it's doubled if you're married filing jointly. So if you make $11,000 as a single individual, you're going to be paying 10% tax bracket. However, the 10% tax bracket for married filing jointly is double that. So, $22,000 in this case, 23,200. Up to that threshold, you're paying 10%. So you have more breathing room per um, tax bracket because now you guys are married filing jointly.
But if they're doubling like the salary, wouldn't that mean like the tax percentage would go up or
So
no?
they wouldn't double the salary. They just double the tax bracket bucket. So if you're single, your bucket you can only put $11,000 in this 10% bucket. However, if you're married filing jointly, you could put $23,200 in that 12% bucket. So you could put more dollars in that lower tax bucket if you're married filing joint.
Okay. So for whatever reason, that's still like kind of confusing to me.
Yeah,
But
if you want, I could share. I don't know if I have an image or whatnot. It'd make it a little bit straightforward. If you want, I'm happy to share that.
it's fine. Just send me if you want. You can just send me the link after.
Yeah.
Um, yeah. So um, yeah. In terms of we can wrap up shortly here, but in terms of like AI and yeah, I guess we're actually in terms of AI and or in terms of getting let's do this one first. In terms of getting like a job in accounting, let's just say I don't
Mhm.
have an accounting degree, but I want to get like an entry level job. I kind of enjoy that kind of sitting at a computer, like plugging in numbers or whatever. Are those is it are those jobs still around? Like it, because the first job that I got out of college or second job out of college was a job entry level accounting job. I was kind of just like entering in checks and money, and
Yeah.
it was really simple. I think it was considered like accounts receivable or whatever. But it seemed like, and this was like after this was like during the 2008 kind of recession thing or whatever. Um, it was really hard for me to get a job after that doing that same thing, and it almost people have said like stuff like with AI and everything, like computers or automation, like it's harder to get those types of job. But would I be able to, do you think, still get like a job like that? How easy is it to get like a job in accounting?
Yeah. Accounts are still in high demand. It's a very safe career right now because no one wants to be an accountant. Over the past, 20 years, it's just an industry that's kind of has not had enough individuals come into it. And you'll see because accountants, if you have worked with an accountant, or even if you've done online filing over the past 4 years, people have drastically increased how much they charge because they know there's a high demand, right? A tax return that used to be $300 is now $500 a few years later. So it's one of those things you could still find entry level job. You may be looking at a big construction company that does most of their accounting work in house to help out with manual stuff inputting. Now, AI can help with some of that stuff, but it's not always 100% correct, which humans aren't either. But there's only so far it could take you, right? And a lot of times I've seen with AI, especially with tax stuff, is it gives you a big piece of the pie based on what it's found online, but some of the stuff online is incorrect, right? So, for instance, if Micah, you have this check that came in from this company, let's say Walmart sends you a check for $1,000. Well, or let's say you paid Walmart $1,000 or something, right? A check went out. Well, the AI may say, "Hey, $1,000 to Walmart office supplies." Well, you may say, "Well, hold on, I bought a desk. That should be an asset, and I need to do other things accounting wise." And I think AI can help out with that, but it's going to be very similar to interactive as it would be with an accountant. The accountant's going to ask questions as AI asks questions to ensure it gets correct and put it and classify it the proper way in that system. But I do think the jobs are still out there.
And in terms of like the higher up position, like what you're doing, do you see, they're saying that like AI is coming for a lot of jobs. Do you think that eventually it's not only accounting, but lawyers and everything else? Do you think eventually that's true? Do you think AI is going to eventually kind of replace a lot of jobs? And are you already seeing it a lot in the programs and stuff?
Great question. So I'm seeing AI starting to replace low entry level stuff. Right? So you can still find a job in this space, but it depending on what you want to do, it may be harder. Like I'm not going to hire someone right now to take a tax return or take just this document and put it in a tax return. I'll see you again tomorrow. I typically wouldn't hire anyone like that unless it's a special situation. Right? Now, what I don't think AI will replace is a knowledgeable accountant, a knowledgeable an attorney. They're not going to go to court and fight for you. They're not going to fight the IRS for you. They're not going to respond to notices. They're not going to, they don't have liability risk as an accountant does to ensure something gets right. So if AI does a tax return for you, great, but you're signing that tax return. If something goes wrong, AI is not going to be around to really help you there. So I think it's gonna be one of those things that it complements those services, but it's not going to necessarily replace the higher end advisory work and working on the throughout the week and the high level planning aspect with those clients.
Okay, cool. And then in terms of like the future of um American economy and stuff, like you said that like we might kind of like run out of money by 2030, and then I think a lot of people are kind of saying that we might, we could potentially switch to Bitcoin or cryptocurrency. How are you looking at the future of um the American economy, I guess, and then also cryptocurrency,
Yeah,
like
great question.
replacing regular money?
I don't think cryptocurrency will replace regular money unless the United States creates their own cryptocurrency. And I don't think they'll connect it or link it to Bitcoin. Um, the reason I think that is because for us to understand, that's going to be a significant amount of power that a country will lose not being able to print tens of millions or billions of dollars, right? They're going to lose so much power saying, hey, I can't lend you $10 billion anymore because I can't go and print it, and I don't have the 10 Bitcoin to give you because I already lent it out. We're not going to be able to do as much as we want as a country to change all the fiscal policies and monetary policies are related to money if we decided to base it off of Bitcoin. Now, if we create our own to utilize, maybe that's something we do. But with the United States and how slow we are to make a drastic change like that, I don't see it happening honestly anytime soon. Um, you know, IRS or the IRS alone, like they're still behind like many years on updating certain systems, and they finally get money, and then the money gets pulled from them because they just political reasons, even though they're trying to update things. So I don't cryptocurrency. I don't think it's going to be something that fully takes over just yet. As far as the state of the economy, I think the economy. I don't think we're in a bad spot. I just think we're expectations and where we are coming into play. Some people thought we were just couldn't do any better. We're doing awesome. We're right where we want to be. Um, and realize now expectations were okay. We're not that good, but we're not necessarily in a bad spot. And I think like right now, economy wise, 4 years from now, I think we're going to be hopefully better off as far as big picture stuff. But as far as everyday individuals, I don't think too much will drastically change as far as economy wise, people finding jobs and work and things like that. You may need to change the industry you're in. Too many people went into IT and tech over the past 10 years. Maybe it's time to become a plumber. Maybe it's time to go do electrician. But economy wise, I think we're okay.
I mean, like you hear that like we're kind of like in debt,
Hmm
30 trillion or whatever to,
hmm
or whatever the number is, to China or whatever, I don't even really know what that means, but it's like, I mean, like obviously it sounds bad. Like, do you think we're
Yeah.
ever going to be able to like get out of that debt, or like what do you think is going to become of that?
So we're a debt country, right? We live and breathe off debt. We make sure you get into debt as early as going to college, right? And then as soon as you get to college, get your car, you're in debt. Get your house, you're in debt. Like everything you do, you're in debt because it allows us to have what we have. Without it, some people may not have a lot of things going around. So I do not think in our lifetime we'll see the debt figure like that trillions and billions go to zero. Like not even close. I think it's going to be a number that continues to go up. It just depends on how fast of a rate it goes up. Is it going up, billions and billions of a year, or does it change to it's only going up millions and millions a year? I'd love to get to that point, but then that would may mean that the economy stops expanding as much. So I don't think they're going to necessarily just say, "Hey, we're done getting debt and going into debt," because it's really going to hurt the economy. In my opinion, I'm not an economist, but in my opinion, I think it would really just hurt us if we made that decision and how that decision would be made.
But I mean, like, what does it even mean if I don't know if like most of our or all or most of our debt is in to like China? Like, are we? Does that just mean like we're just constantly like in a situation where we're just paying them off over and over again? And like is there any recourse from them? Like, could they just potentially be like, you know what, like we're done, like we're cutting
You
you
know?
off. You know what I mean? Like it just seems
Yeah.
weird to me. Like it's like how are we living? Like it almost sounds like that's just America, like that's just how we work. But it kind of sounds like eventually it could catch up to us. I don't know though. You know what I mean?
Yeah, it may. And this is right here is like way over my pay grade, right? On the
Yeah.
high macro side of things. But from my understanding, which may or may not be 100% correct, full disclosure, is you know, America and China, we're in bed together. Like, yes, we owe them billions and trillions and however much dollars we actually owe them, but our dollar as the United States basically run the entire world. Everyone wants to do business in the United States dollar. So much so we're countries trying to get off of relying on us. So even if China came to us and said, from like I said, from my understanding, hey, you defaulted on this loan, which from my understanding, it never happened in U.S. history. Maybe once a few years ago, or we got close. If we defaulted and they say we're foreclosing, want all our money back, or whatever it may be, right? Then as the United States, either A, we're going to print billions of dollars to, impact our economy, which would hurt us, but it would also hurt them just as bad because they're in bed with us. We're also intertwined now. A movement that we make for our dollar and our economy may drastically hurt China and may completely destroy Taiwan because they're a lot smaller on the threshold of things, right? So it has a ripple effect throughout the entire world at this point on decisions that we make and who we're dealing with and debt and who we need to pay it back and who defaults and who doesn't.
Okay. And then in terms of investing in Bitcoin or cryptocurrency, do you do any of that? Do you think it's a good idea? Where do you see the future of cryptocurrency, Bitcoin? Like, do you think it's going to keep going up like it has
Yeah,
been?
great question. So non-investment advice, just for make my lawyers happy at the end of the day. But I think cryptocurrency, it's one of those things where the valuation comes from the people. Um, as more institutions and governments potentially get into Bitcoin, 'cause I think Bitcoin and cryptocurrency, I know they're the same thing, but I treat it as a little bit different. Bitcoin's more, in my opinion, more validated. Um, and so, unless more institutions and governments get into Bitcoin, the value it's going to bring is from what you and I decide the value of Bitcoin is. And if I say it's worth $110,000 and so do you and the majority of people, it's going to go up. If people start selling out of it because it's gone up enough, it could go back down to zero. Is that happening? Probably not. Is it a possibility? Definitely. No one can impact it, change it unless we do all as a whole. I think cryptocurrency, it's investment if you want to diversify and put your money in some crypto. Um, I think crypto is a wild wild west, so be careful what you put in your crypto in. I wouldn't necessarily say throw $100 at Shiba Inu coin because we think it's going to go up, or Doge coin, because unless you do your research, look at the tokenomics and see if this is worthwhile, and it's ran by reputable, individuals with a good background, you could be putting all this money in there just for them to do what's called a rug pull, and you end up just losing out on thousands of dollars. If you look at, I think between the year 2018 through 2022, I think there's like they say trillions of dollars were lost in cryptocurrency from scams and that money going overseas here or over there and whatever it may be. And it's the wild, wild west. There's little regulation. The U.S., we want to regulate on the tax side so we get our share cut of the money, but there's no regulation on, okay, what's being issues, what can I invest my, should I trust them or should I trust them? Should I go Ethereum because they were proof of stake or proof of work? Now they're moving over to proof of stake. Well, that kind of can hurt the coin and how things work. So it's just like we don't have control over it. We don't know always what they're going to do, but the ones that are more open are usually the top, I would say, 4 to 5 coins out there. But one guy on YouTube that I watch every now and again, his name is Voss Coin. He has some good information he puts out on like mining, as well as I think the Coin Bureau. They give a lot of good information about cryptocurrency, what's going on, some coins to look at. But like I said, not financial advice, but it wouldn't hurt to put 2%, 3% of your portfolio in Bitcoin and see what it does. I wouldn't do a large amount because it could go to zero. Super risky.
Yeah, I talked to a guy he lives in like Cairo, and he put like he put like 100,000, over $100,000 something into one. I think it was called like Shiba or something. I don't even know if you've
Yeah.
heard of that. That was
Yep.
the rug pull one, right?
Hmm.
Yeah,
Yeah, and
and he lost all his money that he had made from some company, and to me, it's just kind of like, why would you do that? But it just seems like such a gamble.
it is.
But some people are, I guess, willing to take that risk, you know?
Yeah, let's put it in this concept of things. If we bought into, let's say 1999 was around, and you look like, I think we both were living around that time. There's a company I think that came out called Nvidia. What if we put $10 in Nvidia in 1999? It was a risk, but it just came out. Well, now I think it says it went up like 3,000% as of like earlier this year or last year. So high risk, high reward. You just never invest how much you're not willing to lose. So don't put in $10,000 if you're not willing to lose it. I put in crypto, made a little bit, but I lost thousands of dollars, probably like $4,000 to $5,000 in crypto over the past like 6 years because, um, you know, some play stuff were a little bit more risky. Some things were rug pulls. Some things just like wrong wallet, wrong address, things like that. But it happens. You got to be careful because with crypto, if you lose money, you have no one to call to try and get that money back, and that's the hardest thing. Very
Yeah.
risky.
I think it's one of those things where like it's exciting because it is risky, and like you see it kind of,
Yeah,
you kind of see how like volatile it is, but it's also can be dumb because it's risky. And then Nvidia's the company that they pretty much make like the what's powering kind of like AI, right? That's essentially
yeah.
what they do.
Yep, they're making the chips, and that's why they had a big run up the past few years because they're making the chips for AI. A lot of companies are hiring them to bring chips for cell phones, computers, whatever it may be, graphic cards. They make a lot of graphic card for the Bitcoin mining that people do. So they've had a great ride on crypto and AI, a wonderful past few years.
Yeah. And in terms of AI, I've heard stuff like since they're going to be taking over a lot of jobs, some people speculated there may be kind of like UBI or something like that, universal basic income, that might come into play. How do you feel about that type of thing? Like, where if we get to a point where so many jobs are taken over, where like people are just kind of given like 1,000 or 2,000 a month or whatever to live off, do you think that will happen? And
No, I don't think it
no,
would. Yeah, because I feel like that, perfect world, maybe like that's kind of like a utopia. It'd be great if it did, but for you, let's say for you $2,000, like that's chump change, all right? Like you can't live off of that in California. You want to go see your fiance's family in Portugal and stay there for a year. You need way more money than that, right? Where for me, it's like, well, shoot, I get $2,000, like awesome. I got $1,800 left over every month after paying for diapers or whatever it may be. So I think people are just they will, for the individuals that want to work harder to acquire more, they're going to want to and try to. They just have to find out how to do it and maybe make it harder for those. But I don't think the government will get to the point where like, hey, this is what we're offering. I think before they get to that point, they would introduce legislation that says AI cannot do these jobs. AI cannot do this. These are going to be reserved for human individuals. And are we years away from that if it even happens? Oh, 100% if it happens. But one job to be, that'd be great is a service-based industry job. being a plumber, electrician, technician, like those guys, they make more money than you think. Believe, trust me or not.
No, yeah, I believe you. And then in terms of the companies to that you think are doing it right, that are like just taking off, or companies to invest in, what companies do you think those would be?
you know, it's hard to say because there's so much going on, right? I like I said, I can't give investment advice, but some stuff that I've been looking at that I really enjoy. I try to invest in something I believe in and I use. And Reddit's something I wish I got into earlier this year because I think it came out at like, or last year, I think it came out at like $60, and now it's like at $220 in like 8 or 9 months, Stan. So Reddit's one big one. I got some other stuff. I got energy stuff I'm looking at just based on what's going, what President Trump is saying, and whatnot. And it's just there's a lot out there. Just stand on your toes. I think if we go through another phase of inflation, real estate's going to be a place to be in because if inflation things, prices go up, you want to have hard assets, and that hard asset could be real estate. And if you own real estate, if you bought real estate in 2018 for $100,000, today that's probably worth $300,000. Great return over the past few years. And so if we have inflation like that continue, if they reduce interest rates, other stuff go on, hard assets may be a good place to be in.
And do you do a lot of investing?
Yeah, so I do a lot of investing, researching, reading, looking into, like I said, later this year, the goal is to start offering financial advising for clients that we have, current clients and future clients. So I do a lot with the real estate side of things. So I enjoy investing in real estate and looking into real estate, talking with people with real estate, business stuff. Like I said, a little bit of crypto here and there, the oil and gas stuff. We'll look at stuff overseas potentially if it's worthwhile. There's just so many avenues for investing, but that's where your money makes you money. Until you get more money, you need your time. Your time needs to make you money. And then you use that money to make you more money. But focus, I would say, on your main income source. Once that gets over a threshold where you're comfortable, then start focusing more on your money, making more money for yourself.
Yeah, cool. Okay, so then if you can just plug whatever your website or
Oh yeah.
whatever you want to plug. And then I always ask too if there's any like music, movies, podcasts, books, whatever you're into right now. I'm always looking to find new stuff to watch or listen to. So
Yeah, I would say for me, reach out to me, Joshua Thompson. Website's thompsontaxgroup.com, Thompson with the MPSON, taxgroup.com. We're on Instagram, YouTube, Facebook. We have our website. If you want to reach out, email me, give me a call, text. My number is 805-364-0908. So reach out if you need anything. But I would say that's kind of the best way to reach out to me as far as like me personally, movies and stuff I'm looking into. So I am, believe it or not, like I'm a big anime fan. Like you may not see that, but like that's my big thing. Me and my brother-in-law will go like see movies and things like that. That's like when all the kids are asleep, it's like, all right, the house is quiet. This is my pastime. So I've been watching that lately. Movie wise, there's a movie coming out later this year. I can't remember what it was called. I got it on my like watch list, but that's my big thing. Mainly just kind of like anime right now because it's short, simple, get some good stuff in, and then after that, reading the tax code. That's kind of what I'm doing till bedtime.
okay, cool. Well, thanks for coming on. If you can
Yeah,
send me whatever link you want me to put up there, and if you ever want to come back on again, just let me know.
yeah,
Thanks for listening, guys. It was a good talk. I learned a lot.
yeah. Appreciate it, Micah. Thank you.
Yeah, bye.